fire now is closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share, an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So this point of control rejection up here off the previous 0.65 of the diagonal pitch fan mean reversion path to the upside, and rejection of the 618 found us with that point of control rejection down beneath the equilibrium as we stand currently. Are we going to get the continuation down in the discount region down into this point of control of the previous consolidation range, or are we going to wick and come down to the daily support level of this 28,690 region? I'm not sure, but let's go look at the liquidity as we do each and every day. What is this? Well, this is, whoops, This is what high block capital is people lock their liquidity in the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie in wait or get burnt to a crisp each time. So we talked on the Asian session about possibly coming up to this pool here at the 29,308 region, and not only did we do that, we came up further into the pools at 29.5 and started to think about what the next move was as we saw these 100x longs open up into resistance at the tune of 128 million, and currently they wick down to that 100x pool. So rest in peace to both those liquidity pools.
Fatality.
And that's what happens when you don't use a stop loss. And as it stands currently, we are imbalanced to the short, still in the tune of $1.4 billion in the 1 minute time frame. However, after 159 to 128, we pinged in some longs to the shorts to offset this potential 50x balance. So it's a battle of the 50xers. Which 50x pool do they go to get? As it stands right now in the immediate time frame, we are seeing some tune of 40 million to the 23 and 12, and so it's slightly more imbalanced to the short side up here. You're getting 40 and 33 and 11 and 16 and 13 and 28 and 14 in short liquidity, as opposed to, if we look down below here, 23, yes, 23, 14, 13, 12, there's no 40 million. So as it stands right now, the higher pool in the 1 minute time frame is up here at that 40 million at 29,494. Are we going to make a stab to the upside for the week, for the monthly candle close, starting at the daily candle close of today? Let's go ahead and take a look at the liquidity on the higher time frames of the heat map as we expand our vision. Shout out to everyone here. Booyah. Oh yeah, Mr. Bean. I love Mr. Bean. Mr. Bean was a hilarious show back in the day. For sure. No, I know you're just messing with me for sure. I don't have rage fit like some people do. I think we know who we're talking about. So anyway, yeah, as it stands right now in the 7-day time frame, you are even Steven, dead even. There, I don't really see any imbalance on either side. If anything, I see a slight imbalance down here at 26,450, but I don't think we would ever go that low. But yeah, it's pretty much dead even on both sides. You're getting 3.9 to 3.8, slightly more to the downside of the 28.8 region, but we're pretty much even Steven, winding up for something as Bitcoin does its sideways thing. Unless you're like a scalper that likes scalping these little moves, it's just not, it's not predictive, it's not guaranteed enough in terms of liquidity for me to really be able to do this consistently, because you have to be on at certain times of the day for this to occur, and you have to wait and position for this to occur, which is unfortunate. Whereas NASDAQ, you can do it any minute of any point of the day, and there's pretty much the volume there to support it. So on the 1 month time frame, sorry, I digress. On the 1 month time frame, it looks like you have the double digits down at 28.7, suggesting the imbalance to come down to that 28.7 region. Just above the double digits up above is at 30,500, and that is the only place we have. So the nearest point for the billions to reclaim on the monthly time frame is to the downside, and it looks like there is more liquidity to the downside in the yellow region here. There is an entire region starting to be paved up into the 37k region, so there's interesting to note that these double digit pools at 36 are starting to form on the monthly time frame. That's the first time we're starting to see these ping in since July. Basically, before July there was nothing up in the 36k region. Now we're starting to get 36k pools form. Interesting to note. As we expand our vision to the 3 month time frame, red hot down below at that 24.6 and below region. Imbalance is to the downside. However, you are seeing these thick regions up here at 32.50 57, 47, 41, 30, 34 billion, 52 billion respectively, on the way past 32k. Are we going to come down, spawn some divergence off of this, get everyone in a bearish sentiment to go up? That is the question. Let's go into the 6 month and expand our vision some more. As you get into the 6 month, you start to see this region up in the 33k region in the 100 billions. So this $400 billion up in the 33.3 region is up to that region is pretty enticing, rather than coming down to the 24.9 or 24.6 region. You do have near 300 plus billion down at the 24.3. So if you are to drop down, you would 𝗥𝗲𝗶𝗿 down immediately. But it makes more narrative sense that why did they let this percolate so much? It was basically in the tune of 142 and it's gone to 180. So they let 40 billion build up here, as opposed to, if we go back here, we had 102, 126 to 20 billion. So they've let more longs percolate up here in this region than they have let shorts percolate up here. So there's only 20 billion in shorts that have been percolating up here, and there is slightly more, 40 billion in longs percolating down below. Does this mean that the attack to the 𝗥𝗲𝗶𝗿 idea to the downside could be inbound? If we look at the 2-year time frame, you see this near 600 billion up in the 33.2 region on the 2-year time frame. This is why I was expecting a certain bounce at some point to come up to that 33.3 region. Triple threes for the win would be nice. So let's see if that occurs in the near days. What is this market maker position down here for the $241 billion down at 24.4? Are those positions by BlackRock and other things that are untouchable, and they're making their liquidity path to go up into these regions upon some sort of news release of the ETF approval of some kind? They time the news releases around kind of like bullish moves in the charts. So if we come down into these regions and then get a bounce, that's kind of like where you would want to see a swing. So let's go ahead and go into the Binance chart as we did this morning and see where we stopped in our assessment. So I was out with my daughter at a grape picking thing. So we were expecting a bounce from this region earlier today and expecting it to come up to here. I wasn't taking any trades today, false move Monday, and also, but we were expecting a hit to the highs, and they met the expectations and then some. Generally, if you see a displacement like this, what is a displacement? Well, when you see a higher high being put in locally. So we have this higher high being put in locally, so that would be an idea. You could have taken this as the idea to short from this the 0.65 region of this bearish trend based fib level that we were talking about. We did get the shallow drop from here over the weekend from the 706. So we're going to reassess. This pool was reclaimed. Let's delete this. And we did not see the drop fully to the downside, but that could still be on the table. So let's go ahead and throw on our oscillators, shall we? Boom, heads up display is on. What is this? Go look in the link in the description. Go down to features, toggle it if you like, and then you can look at each little bit of happiness of the components as we go over them. So let's go ahead and make our assessment through the time frames. Looks like you had 5 time frames overbought here, and it started to fatigue down as we were not making higher highs there, and the Asian session basically did their whole like pump and fade to London. London went sideways, handed it to New York, who did a fake out breakout to the downside as it stands currently. Let's see how we go into the odd hours of my night for that daily candle close in my morning, as I am in Japan. So let's go ahead and take a look at that rejection of the 6-hour cloud. So we had an attempt to try to break above the cloud, got sold off into that cloud resistance. The cloud has come lower than we previously expected, so it could be continuing on this path here. We are getting a rejection off the cloud as we speak on the 6-hour time frame. This was the time frame we told you to watch out for. Why? Well, we were talking about the money flow. Ooh, we're getting money flow, hidden bearish divergence on the money flow, starting to flow back out here, and it's deviating above the RSI, suggesting it comes back down. As it does in the past, you can see it do this before, and you can see it come beneath it and go up. We talk about this a lot on the live stream about how the money flow coming above the RSI suggests that it will come back down, and also your stochastic RSI is extremely overbought, suggesting you could come down as well. You are getting pinned here, so what does that mean? Let's go to the higher time frames like the 8-hour. Occasionally I look at the 8-hour, starts to give me some special stuff sometimes. Money flow starting to come back down after the previous bearish divergence on the money flow as well. Hidden bearish starting to play out, and you're getting fake takeoffs of the rising sun event on the Williams. As it still stands, we're still valid on the cross-up event for the 12-hour time frame. The cross-up is what you have with the baselines holding the price action here. So the cross-up event is still in your favor until it's not. Let's make our proper descent through the time frame, shall we? So as we did through the beginning of the Asian session, we were talking about this cloud shift and this insinuation of the volume flowing out, and this potentially being A, B, C to the downside here, A, B, and C, and trying to find some sort of bottom here. What does that mean for the monthly candle close? Unsure, but if you look at, we already talked about the 3-day and how the 3-day has the cross down event, and the last time we had that was back here on April 16th, and boom, we saw 60 days of downside thereafter. So are we going to at least see a retrace down to the 3-day cloud? And that would coincide with the point of control that we were talking about on the Coinbase chart down here, coming down to that region. Entirely possible. The bearish trend-based fibs are still holding true until they don't. So this drop impulse retrace to the downside has the math contained within to come down into the 1382 and the Hail Mary below at the 1618. So until we see otherwise, as it stands right now on the 3-day time frame, the stochastic RSI is coming down here, and you had money flow divergence on the 3-day, which is starting to play out, and see this cross down event occur. Now you're getting the Williams cross down event, but the momentum has yet to do anything. There is a full moon tomorrow evening on the monthly candle close, after the monthly candle close on the 1st. So does that mean we stochastically reset something on the monthly time frame, which sends us into orbit? I don't know, but if we look at the daily time frame, we are extremely oversold on the Williams, and we're starting to see some sort of expression on the daily time frame. However, we are going sideways, which suggests this could get suppressed to come down some more on the daily time frame. If we go ahead and expand our vision to the 22, or lower the vision, whatever you want to call it, the 22-hour time frame getting a sell-off wick as of this moment, a shooting star to the downside, but holding this cross-up event on the 22-hour also making its way up here with the money flow above the RSI, suggesting fatigue, because we have gone nowhere but sideways this entire time since Wednesday of last week. So this could be just a consolidation range to go lower, and whatever they did trap up there could be what they need, the special sauce to take it lower. 12-hour time frame cloud is also showing improved bearishness, the volume flowing out here getting thicker as we go lower. So you had thinning, it wasn't showing very much expression, and then here starts to pick up steam. So that's something to contend with. You're not going to immediately turn that around overnight. It's going to take a few candles at least to come down. So it looks like we're starting to drop here, so to the downside. So let's go ahead and take a look at the 6-hour time frame. 6-hour getting that nice rejection off of the 706 trapdoor. I like to call this the trapdoor of the bearish trend-based fibs because it opens up and then boom, to the downside you go. And generally you see that in a very quick manner if it does open up. So you get that rejection off the 706/cloud and you can be dropping down here on the 6-hour time frame. Overbought on the stochastic, overbought on the money flow above the RSI, suggesting you come down. I said for the last day, please watch out for that 6-hour time frame. And unless you're looking at all these components, you're not really seeing it, which is why we have the components we do in our suite here. So you're looking at the money flow, and it's a formula. Consider the volume weighted RSI, which juxtaposed with the RSI can give you valuable information about when volume may enter or leave the market. Just something to think about. And so as this 6-hour time frame plays out, you can wonder what that could be, and that fatigue is starting to occur. If we look at the 4-hour time frame, we had this attempt to break above the cloud here, but as I said before, the cloud came down to price action. Price action didn't close with the vigor above it and then reclaim it with that shift in mind. So it's been a lackluster takeoff, to say the least, and so I'm not sold on any long idea. I've been looking for this B wave to come down to here since basically the weekend, and talking about how you could find these entries off the 3 hits to the high, and you have the power of 3s. This is just one big 3 hits here that played out, and you could look at it as 1, and then you have 2, and then now you're back in that 65706.3 for a potential short to the downside here. Not financial advice, just looking at the math and seeing what the math is saying. And if you look at the 4-hour time frame as well, you're getting ambiguously overbought and getting a lot of vectors. You had three green vectors, and so a lot of volume entering in the last day since basically Sunday and Sunday night my time. So leading into the weekly candle close, we've seen a lot of pinging liquidity. I think they're trying to ping the orders and try to get at least some interest generated, because there was no interest generated all weekend except for these measly 43 million pools, which they did come back to. So they need to generate interest in order to get some liquidity on the table. So they need to create some price action, to create some explosion, to create some traps, and then they go and take the money off the table that they're setting the trap for. So hourly time frame. And as people wise up to their traps, they don't enter the traps as easily, so they have to make more enticing traps and more confusing traps that make people more speculative than TA based, which is why I'd wait for the juicy setups of the liquidity grabs, and when they grab that liquidity, you can normally take this bounce up easily, but the FOMC put a damper on that plan. So are we going to see that with the hourly time frame? Hourly time frame getting oversold here, but in this last, you're at the stochastic value of 0. In the next 12 minutes, this will round out and start to give the potential for an hourly play, perhaps. The last few times of the momentum on the hourly time frame could play out some more to the downside, but let's go ahead and take a look at the 15 minute. So the 15 minutes still has strong momentum with this cross down event of the baseline, showing that you could be coming down further. You have yet to cross up unless there's some vigor coming into the equation. Let's go see what the liquidity suggests, if anything got pinged in terms of shorts. Shout out to everyone here, 4 people, yo yo yo. Oh, I'll go over the new indicator in a little bit for scalping the Nas. Yeah, it's still kind of beta testing, though. I'm not really officially releasing it just yet. All right, so 15-minute time frame. Let's go to here. So nothing getting pinged in just yet. You're getting more shorts to enter here. 36 million, 11 million, 36 million here. They spiked up to spook them out and then just said, screw it, we have targets to make down here. And they didn't ping in any new longs necessarily, so you're getting more shorts, but 36 million in the grand scheme of things is no 200 million. So that when they really rip the price, that's when you start to see those big pools, which we've seen in the past, and that's when you start considering paying yourself, because when they open up big pools, 100+ million like this, and they spike up like that, they come back to grab those 100xers. Unless they reprice the range entirely, in which case you might not see that range for a few weeks or even a month or never again. So not really seeing much generated, few things in shorts. They're going into the 100xers as we speak, going into these 100x longs. They already wiped out basically all of the ones in this rise up here. So unless they're coming down to the 128 million down at 29k even, there's really no interest being generated to justify going lower. So if they continue lower, it's not necessarily to get these 100xers. They've decided to go and wipe this slate clean, so to speak, beneath this 29k region where it's starting to get thick here. So this is getting mighty thick on the 1 minute time frame. If you do look at this comparatively, you do have a lot of 50x, 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 these pools, 100, 200, 300. So back here, lest we forget this guy, this 100 million pool was imbalanced from these pools here. So there is $100 million pool that opened up into this level here at the 29.4. I think I remember a live streamer putting out a bull flag and entering a long up here just before he went offline. So he got a lot of liquidity trapped in that region that are still hoping for a long trade, so they could come back and wipe the slate clean of all these guys. And that looks like the thickest region on this 1 minute time frame. You do have just that 159 million pinged in here, and they did their damnedest to stop that guy out as much as they could, or those guys, that pool. I refer to them in the abstract as a guy, but it's a bunch of traders pooled in at that level. So maybe that was the last hurrah before they start to come down into that region, because there is the overall imbalance here. Even though it's saying there is a 1 billion imbalance in short liquidity, we already ascertained that on the monthly time frame there is that double digits down here at 28.7, 13 billion to be exact. So they could be coming down to that region now as we start to wick into that, so we could create that divergence for that surge up to close out the month strong. You can't get the power to go higher unless you go lower. So the way to get the energy and the momentum is to stop out the over leveraged, and then they'll reposition on their carcasses and shoot it to the upside. So we're talking about that double bottom idea. This wick just doesn't do it for me just yet. So we have our alert set, and we are still eyes on the prize down at these regions. 28,690 might be the region. We did talk about basically that 28.7 coincides with that daily level, so we could see that coming to fruition. Currently rejecting off the fibs, looking good to me. All right, so we're not going to go beneath the hourly time frame, kind of not interesting to me, but yeah, the hourly time frame, we'll come back to see how this closes. We're going to go over the Nasdaq, and somebody asked about the new indicator, so I'm going to do that real quick. So we're going to take off the old one here and go to the 1 minute. Why do we go to the 1 minute, you ask? Well, you have to be bold and fast and wise to take that 1 minute time frame for a ride. And you have to throw on here. Let's throw on 𝗥𝗲𝗹𝗁𝗏. All right, so basically, let's just split it out here and turn this to the 30-second as well. So we had some decent plays here. So check it out. You see the money bags and the crystal divergence here on the 11 o'clock time frame, and then you see the money stacking, stack. You could have entered from the first stack, and then boom, you were up by a massive amount here. That was, you know, a good 200-point move. Sorry, 51-point move. I'm looking at the ticks. 58 points. Actually, no, that's, yeah, from 6,800 to 860. So yeah, 58 points. And then also up here on the opposite end of the spectrum, back here, or was it? Ah, yes, here. All right, so let's go back over here. Boom. So here you had the fingers down telling you the momentum's not in your favor. You started seeing bearish divergence on the money flow. You had it on multiple money flow indicators indicated by the fire here and the crystal. So money's burning off. Finger down telling you like you might want to consider going short or getting out of the trade. You have money flying away, people taking profits, people taking profits, people taking profits, and watch out, don't go long, and boom, to the downside. Boom, and then they had some bullish divergence spawned off the people trying to DCA their way to their demise, and this is the way of the ABC. So the ABCs do basically sputter and create that kind of descent into somebody's liquidation. And then you saw this liquidation, and then we're starting to see here leading into the open basically some cross up event, and you're seeing the money fly away, but then the money starts to stack back up. Here we go, stack back up, getting bearish divergence, come back down, fly away, and then starting to see the money stack back up. And then right around here, right around the open, which is the most difficult play to catch, which is the pivot of the open. So here we go. You had bullish divergence here on the 1 minute. You had not only on the RSI but the money flow, and you also had this money bags of another money flow divergence stacked. And then if you missed that entry, which was back here, you had another chance to enter thereafter. Wait a minute, we're looking at the wrong point. Yes, here. Sorry. So even if you missed this point here, which was the first one, which is a little bit risky, even though that was talking about that, you had another 30-second bullish divergence when they tried to make a lower low and couldn't. And then you had that again, confirmation, also stacked money, stacked money, stacked money. It's meeting our requirements for entry from there. And boom, take it to the upside. And yeah, that's how it works. And then you started to see this bearish divergence, and it stalled out and went consolidating. And then you had other stronger bearish divergence, said watch out for your longs, and then boom, it dropped to the downside. Boom, back to the 618, bounced off that, and we're putting these updates for the people in our Momentum Master Discord, talking about all of the things we were looking at the time, and so on and so forth. So this is just a little sneak peek of something in the works. Can't give you too much detail on what it's about, just it's something cool that's getting gains, actual gains, not fake symmetrical triangle, both sides projected confirmation bias gains like other people who go live and wear suits and ties. Yeah. All right, so looking at the 1 minute time frame, here we go. So the 1 minute time frame has the rejection still happening, and we're just taking it to the downside. Looks like the fake out breakout, I mean, really nasty price action, just not really like my cup of tea. You know, I'd like to see it get to a region. Bitcoin's just been kind of boring since Monday. Like, when is this? Monday of last week? So 1 week we've just been going sideways. That's why it's just like, think of diversification. Link in the description if you want to get funded to take a look at possibly doing NASDAQ. NASDAQ does follow traditional TA, but you have to be fast and not think of it in the same way, and think of it more scalpy, and taking these points, like taking this move with a bit of a few micro contracts, you could get a few $100, like $400. Today's gains was 400 across 6 accounts, so you know that's a decent salary, you know. So if you just compound it, it's less choppy than this. 1 5 minute, let me reiterate, 1 5 minute candle of NASDAQ. So let's just look at this 5 minute candle. This 5 minute candle right here has more volume than BTC in a day. in a day. So there's just a lot more players on the table, and there's no, you know, there are traps being laid, but if you use traditional TA and watch these rejections and watch these bounces off of these golden pocket regions, they do play out. So that's my little stint on NASDAQ for the night, and let's just go into what's happening in the last 1 minute of the stochastic reset for the hourly. Are there any other time frames which coincide with this hourly? Yes, the 4-hour is also closing in 1 minute. Knowing which time frames close and when, I did a little breakdown of that a long time ago. I'll see if I can dust that image off. I did a spreadsheet on all the time frames basically in a day and which ones coincide and when. 8-hour also closes with the 4-hour here, so it's going to reset some stochastics and set some algorithms into motion. So what does this 8-hour do in conjunction with the 4-hour? So you got the 1-hour, the 4-hour, the 8-hour, most likely the 2-hour too. We'll check that out because the 4 and the 8 are intervals of 2, so most likely the 2-hour too. So we'll see how those reset the stochastic data here, most notably the 8-hour. Getting the volume pick up here as we start to drop. So we got that rejection wick off of the cloud on the 8-hour too. The 8-hour has no signs of abating in terms of momentum to the downside here, so not interested in longs just yet. And so yeah, that triggered some algos, and it's just starting off bleeding into some more. The KD line came down to the 73 value. You could double top, but for the most part you could reset, hard reset too. Let's go to the 12-hour, see how that, you still got 7 hours on that, another 8-hour candle for that, basically the daily candle close. 6-hour, 2 hours from now, and the 2-hour time frame, yes, did close just a moment ago. So the 2-hour is also reset some and coming some momentum to the downside. So that's what's possibly suppressing the hourly here. The hourly is at 0, and you could be getting a bounce, but if once again I said, unless there's some massive shorts entering here, it looks like the trap has been sprung, and they're not interested in any of the liquidity here. They're interested at the sub 29k region, because there isn't really much in this region for them to bounce off of in terms of liquidity. So yeah, coming down to the 29 even and below, we ascertained where that 119 million at 28,993, and that entire region knocking out the 28.8 and possibly below on the monthly time frame at the 28.7 is where my story is, and I'm sticking to it. All right, well that's it for me for tonight. Let's just leave it at that, shall we? The 4-hour time frame is very messy right now. You are rejecting off of the, trying to attempt to hold the adaptive, but you just closed beneath it. The hourly in the 15 is, yeah, it's my story and I'm sticking to it. Let's look at total, and then we'll be out for the night. Let's see what total wants to do. Total's taking a total dump to the downside. Also getting overbought on 6, 5, and 6 time frames, so starting to come down here. So similar to here, just how you rose up, this 5 and 6 should take you all the way back down to the 706, or if you get rejected off the 706, then down into these 1 regions. And total could see this ABC come down to fruition as well. Looking at total 3, also bleeding out as we speak. USTD dominance taking a rise as people get kicked out into the trades. 5 time frames oversold on the USTD dominance. People get knocked into USTD, and Bitcoin dominance trying to make a rise here, but it can also rise as it drops if there's nothing else, if people are getting knocked out of their BTC pairs into BTC from their alts. And yeah, that's about it. That's my story. I'm sticking to it. So once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the